Hello everyone, it's Evan here from the Trade Risk, and this is your Stock Market Weekly update for Friday, November 3rd, 2023. Live on camera today. I was gonna do a live stream and ran into some difficulties at the last minute, so figured I'd do the old school recording, but I kept the camera on. Let me know if you are interested in doing some of these live streams on Friday. I'll try and announce it ahead of time, maybe make it some interactive kind of Q&A, talk through what's going on. If that's interesting, leave a comment. Let's get into it today with this week's massive rally here in stocks, fueled by the 10-year yield really sort of plummeting here. Yields across the board, mostly on the long end, really falling like a rock. I think it was down 30 basis points for the 10-year going into the weekend at 4.55. We were just talking about 5% on the 10-year yield, and here we are now talking about 4.5 and now perhaps lower. Stock market, of course, loving it. We had the FOMC meeting out, Powell sounding pretty satisfied or kind of keeping things packed where they are, maybe even a little dovish. Market, of course, loving that. And clearly the bond market is kind of doing a lot of, well, the Fed's sort of movement, so to speak. Friday, job growth. We had job day Friday. Job growth shows signs of slowing. Of course, you know, we're in sort of a backwards type of environment. Bad data is actually good, or bad economic data tends to be perceived as good because, again, it's more fuel sort of encouragement that perhaps the Fed is done or will stop their rate hiking quicker if the economy is in fact getting weaker. That's what we saw on Friday. We also had Apple announcing earnings. Not a whole lot. I mean, it was kind of a big nothing burger in terms of results. They were mixed. Services good, iPhone slowing, or, you know, not as exciting, MacBook so it was all just kind of a nothing sort of market priced exactly where it was. I mean, there's a couple of percent move. Obviously Apple did rally a bit into its event, but generally speaking, nothing too exciting there. Russell 2000, we talked about that chart last week, and it saw just an absolute ripper off of its 3-year lows, and we did have a US dollar breakdown. So we got lots to talk about. Very bullish week here for stocks. Let's get into it in just a second. All right, here we go. We've got some charts in front of us. We're using Warden TC2000. That is the charting platform we tend to do a lot of building on and development on, and we spend a lot of time actually supporting traders on this platform, sort of technology partners of sorts. So if you are a user of TC2000, you haven't checked out our website, you got to head there, thetraderist.com, click on the big Warden TC2000 page link at the top of the website. We've got lots of cool things, guides, downloads, free, paid, custom indicators, all kinds of cool stuff. So check us out there at the Trade Risk. Now let's get into some of the numbers here. It's a huge week for stocks, 5, 6, and 7% up for all of the major indices. A pretty even race. Dow Jones up 5%, Russell 2000 up 7.5% this week. And I think what's cool is looking at the 1-month returns now, everything back into positive territory after this week. And looking a little bit lower here at volatility this week. Nasdaq vol closing at 18.66 going into the weekend. That's down almost 6 points. And then look at the VIX, 15.03 going into the weekend, down from 21.27 last week. Over 6 point drop for the VIX. These are huge moves in terms of volatility, just pricing and fear in this general market. If you take a look at these nice little line charts here, looking at the week's action, you can see everything just starting in the bottom left this week, finishing at the top right. Russell 2000, again, the biggest performer. If we take a look at sectors here that were really sort of leading the charge, it was real estate at the top of the list, up 8.5%. That's the XLRE, 8.5% move. Again, real estate being one of the sectors that is very heavily sensitive to interest rates and yields, and clearly seeing that today. Financials, again, same boat, up 7.41%, and then consumer discretionary 7.11%. Those were your top three. 7% also for communication services, right in that fourth spot, up 7%. On the downside, everything was still a winner this week, but we did have energy as the relative underperformer, consumer staples and healthcare. So they were up only 2.5%, but you know, almost any sector you were in this week on the long side made money. If we look at the 1-month returns, again, everything almost in green territory here. Healthcare is the only thing that is down now over the past 1 month. If we take a look at our sector trends here. So this is our smart trend filter, custom indicator that measures price and volume across time. And if we take a look here at this chart, you can see most every sector now turning up and printing a buy signal here on the daily chart. So all these trends are starting to change course. Again, these trends do take some time. They don't, usually change on just a day's worth of bouncing. But when you get 2, 3, 4, 5, 6 days of aggressive rallying, you do start to reverse those prior downtrends. And that's what we're seeing across most of these sectors now, entering an uptrend or transitioning at this time. So certainly be interesting to see if this rally can sustain. Of course, we've covered a lot of ground in just 5 or 6 days. We're going to talk about that in just a second. If we take a look at market breadth here, you can see as something we've been tracking on the bottom side here, this is the number of NYSE stocks hitting 52-week highs, number of NYSE stocks hitting 52-week lows. You can finally see this ratio starting to flip into the bull favor. It is minor, it is small, it is starting to turn a corner at this point. And what we essentially want to see here is more expansion in this direction, right? If you're bullish on this market, if you want to get that year-end Santa Claus rally, well, this is what you want to see continue. You want to see more stocks hitting 52-week highs, less stocks hitting 52-week lows. We're starting to see that ratio tip into the right direction. And if we take a look at these other breadth metrics that we've been talking about, so the percentage of stocks over a 200 SMA, that got below 20% coming into this week. Last week was below 20%. We talked about it historically, very oversold, kind of washout levels. Same thing with the 50 SMA. And then look at the spike here in the 50 SMA. So we went from coming into this week at only 11% of stocks that were above a 50 SMA to finishing the week with 46%. So a huge move, as this rally really sort of just catapulted a lot of stocks higher. And again, you're seeing it slower on the 200 SMA side of things. Of course, if you look at our dials here, you can see everything looking pretty top-notch, top percentile in terms of the percentage of stocks or the number of stocks that were up this week across all of the major indices. Let's move on here. Take a look at IBD's top 10. So this is their IBD 50. This is the top 10 stocks in their IBD 50. So Investors Business Daily, they're a sponsor of the show. Shout out to them. Thanks for making the show possible. You can get access to their digital subscription with a link in the description of this YouTube video or on this blog post on our website if you're watching this on traderisk.com. But if we take a look here at their top 10 names, a lot of changes here again. So there's been quite a bit of movement here in the IBD 50 over the last couple of weeks. You can see brand new, I think all of these, or 6, 7 of these. Adobe is the same. I think Deckers has been on here, but all of these others, and Zscaler may have been on. But a lot of these others have changed hands. Great week for them. Great week for growth, and especially just some of these higher beta sort of names. So, congrats to all the bulls involved in any of these names, but certainly pick through this list and check out that link in the description to get access yourself. If we continue on with sort of the market profile this week, top of the list here for commodities and dollar was DBA. So this is the agriculture ETF. Was up 1.59%. Copper still doing well. Natural gas, we're going to talk about that in just a moment, was up slightly this week. Silver was up slightly, but gold, dollar, oil all down this week. You can see oil starting to retrace a little bit heavier here. It is still in this kind of transition mode or pullback mode or consolidation mode, but it's clearly had a pretty good run this year. Big story, of course, as we've talked about multiple times already, were treasury yields. You can see all of these durations here are just sharply kind of moving lower here and threatening to really sort of break down. Again, if you're looking at some of these trends that have been in place, you're starting to now get the slope at which most of these yields have been rising, starting to now challenge them or break down after this week's move. Again, it's going to be hard to say that the tops are in and this is it and we're at the end of the cycle, but it's certainly looking at least a little bit dicey here for bond bears. So let's keep an eye on this. Obviously, this is what's driving the action, and let's get into some of the price action now. So for the S&P 500, the weekly chart, really a thing of beauty here. Take a look at this weekly candle, 5.85% monster move, really just negating and retracing the last 2 weeks of selling that we saw out there in the market. And we saw 2 heavy weeks of selling, but clearly that was enough to really just kind of wash out sentiment, wash out positioning, and really kind of squeeze higher this week. Even if the news wasn't amazing, we still had just enough people off sides to really kind of squeeze us higher. If we go to the daily chart here for the S&P 500, again, this is, the same old roadmap we've been looking at. We talked about 4,100 last week. We talked about 4,300. That was this general area where we were consolidating and we broke down from. And now you can see, again, we just snapped back violently as we sort of game plan and kind of kept this open mind last week. We talked about in many of the indices here that you need to have sort of that flip level where you start to say, okay, if a market can reclaim this area, you have to start to think to yourself, you either need to get on board or you need to at least get off the shorts if you're shorting something that had been previously in a downtrend. When things start to flip above significant levels, that's when you really want to start to pay attention. And so this week, I mean, really getting back over 4,200, getting back over these early October lows around 4,220. I think that was the day, let's call it more or less Wednesday, going into that closing up around 4,237. I think that's certainly a day where you're starting to take action or starting to take note of the reversal that is happening. And then, of course, Thursday with the gap up and strong follow through higher, that clearly is telling you that something is changing here in terms of positioning and just overall direction in this market. And then, of course, we gapped up again on Friday and then pushed higher here. So this is a big, fast, sudden move. You had to be quick to catch this move. Congrats to those that did. We did reclaim some important levels here. Again, going to the 4,100 zone that we talked about last week. That's clearly where markets sold off to, got below that lower Bollinger Band, and then we springboard back. We reclaimed 4,200, and then we're back into this old 4-week range that we were in for the end of September and first 3 quarters of October. So this is good here in the short term, but just keep in mind, we have covered a tremendous ground, 6% off of the lows here in just about 5 days of trading. So things are a little bit frothy, stretched to the other side now, how quickly things change, but certainly did some good technical repair here. And now we want to see if this market comes back down, settles down, backfills, holds some of these levels. That's what we're looking for to try and get some of these lows to really stick here. But S&P 500, nice recovery this week. Same thing for the Nasdaq 100. Again, it's the same story. We had 2 weeks of heavy selling. And then, of course, this week now 6.5% up, recovered basically all of that selling and some of those big technical levels we talked about in last week's video. Having that open mind, I think 355 was sort of the call out flip level. If we V-shape over 355, if buyers can get us back over 355, that's what would start to get me more encouraging on the long side. We did that on Wednesday of this week, and then we saw more follow through, more squeeze type action Thursday and Friday. So of course, it's easy to talk about this in retrospect. We had big catalysts that I think a lot of folks were scared of or just positioned away from or more defensive. We had the FOMC meeting, we had Apple earnings, we had a lot of other tech company earnings. So, those were all events that seemed to either got people hedged or sidelined, and that really caused, just the swift move up in markets here. So Q's recovering that 355 level, and Russell 2000, what a beauty. I mean, this is just so textbook here. We make 3-year lows in the Russell 2000. We tag those levels. Everyone's looking at the big monthly breakdown, and then you get one of the biggest up weeks for the Russell 2000 that we've seen in a very long time. Now, here's the thing, a huge week for Russell 2000, up 7.5%. But when we look at this just general structure here, I mean, we're still arguably in a weekly downtrend, right? This in some sense has only just sort of reset some extreme oversold readings here. And, we could very easily still be in sort of this downward slog here in the Russell 2000, even despite a 7.5% move up. So just keep that in mind. It's obviously a good start. It's obviously, something that is just really, from a textbook kind of classic TA perspective here, as you get to the bottom end of the range, as you have oversold conditions, as you have sentiment that was terrible, you have all the ingredients to sort of flip back here. And we talked about this last week. Rewind the tape. Go to the Russell 2000 chart from last week's video. We talked about having an open mind, being on the lookout for a V-shaped rally. and you know, we sort of game planned it. We didn't predict anything. We just said, you know, this is why we do the videos, is we keep that open mind. We try and get a pulse of where sentiment is, and just where the technicals and perhaps misalignment can be. And Russell 2000 just really kind of picture perfect here. So great week for the bulls. Again, we still need to manage risk. Congrats to those who, you know, managed to catch a lot of these rallies this week. We're not out of the woods, but we certainly did repair a lot of damage this week, and you know, certainly goes a long way as we look into year end. So that's really, you know, kind of the standout there for the major indices. If we go to volatility, like we talked about at the top of the show, look at the VIX here from 22, north of 20, all the way down to 15 in such a fast amount of time. I mean, markets are moving super quick, and this move this week was just massive here. So again, contrarian is probably now thinking, well, in the very, very short term, we're probably a little overgone to the long side. So just be careful there in the very, very short term, but certainly nice to see the VIX back down into the mid-teens. The goal now is to keep it there, and we'll see if we can do that. Mostly in that same kind of vein here was the dollar, UUP. If we look at the dollar index here, you can see big reversal this week. Heaviest volume we've seen in some time. You can see the big kind of attempt to break out, reversal, and then close near the lows at 5-week lows. So you do have the ingredients here for sort of a dollar reversal with that potential breakdown catalyst. Dollar breaking down is probably going to coincide with yields also continuing lower too. So that will all kind of work the machine into, you know, liking higher equity prices if all of these trends can continue. If we go to the 10-year bond IEF here, you can see again heavy volume this week, one of the heaviest traded weeks here we've seen now this year, and it was to the upside. It was after, you know, some heavy volume had been stacking up recently. Last week we talked about, you know, the fact that, you know, one of the silver linings last week, right? We talked about earnings couldn't save the market, but hey, at least yields didn't continue to move up, right? At least interest rates didn't continue to accelerate higher. And of course, you know, we talked about the possibility of this bottoming process, you know, just kind of still taking shape here. And of course, we got more, you know, kind of reversal confirmation here this week. Again, I'm not going to stand here and proclaim that you know, we saw the highs in interest rates, but it certainly, you know, from a 1 week at a time perspective is a good move to see in that other direction. So that was nice to see. I also want to talk about natural gas here before it loses my radar. So I don't, you know, talk about this every single week, but we're certainly getting this nice consolidation taking place here and taking shape here in natural gas. It is a really difficult instrument to trade. My best recommendation is just go smaller size and try and, you know, survive through all of the whipsaw that natural gas traders have to endure. But this has been moving sideways now, I mean, almost all year, basically since April. It's traded in a pretty tight range here, so something to keep on watch. It's certainly has a lot of fuel in the tank here, and we'll see which way this ends up breaking out. It's attempted to break out above this 750, 75, whatever level you want to use, multiple times, and it has just quickly reversed all of those times. So keep an eye on it. I think it's interesting. It's coiled, it's tight. I don't have any position in it at this time. So that is, I think, all the majors I wanted to talk about. If we go to some individual stocks, Nvidia. So again, there was lots of chatter. Everybody kind of got up in arms here as it started to break below $400 earlier this week. And just like the Russell 2000, you get a highly anticipated spot. You get this highly watched spot that everyone's got the breakdown level on their charts or alerts set. And of course, it's the, you know, final sort of sucking in the late shorts and capitulating the longs. And then of course it, you know, creates the fuel to reverse and push up. So Nvidia, the king here for semiconductors, continues to hold on to this broad level of $400 support. It hasn't reported earnings yet. I think it's still a couple weeks away. It's a little off cycle to the rest of tech, but you know, for now, it's saved, it's working, it's back in the range, and it is so far holding. ARK, big week for ARK this week. ARK Innovation up 18.59%, one of its heaviest volume weeks all this year. It is still broadly consolidating here as well. Kind of looks similar to almost well, it's definitely different, but Russell 2000, where it is, was one of the first to get kind of beaten up and sold off, and then it just has been going sideways for a very significant amount of time. Didn't make new lows here recently, unlike the Russell 2000. You could always look at the ARK Internet ETF as well, ARKW. Looks great. It's been pulling back since July, starting to lift up right now. And of course, lots of these companies here are, maybe not so profitable or just high on the growth innovation spectrum. And so it is very beneficiary to interest rates, let's call it. And so lots of these companies did report earnings this week and responded favorably as the sort of icing on the cake. So congrats to those that have been sticking it out in some of those names. And I think that is about everything I wanted to talk about. Again, if we go to some of our, some of our industries notable this week, we had 25 showing up on our scan here. You can take a look through these. A lot on the tech side, electronic side, and it does make sense with some of, again, just the more macro moves that we've seen. Again, I think in the short term, we've covered a lot of ground, so let's just see if these levels can hold, but certainly good progress so far going into year end to start November. As they say, lots of tax selling takes place for some of the bigger funds towards the end of October. October is always typically one of the worst months for the stock market. That's out of the way. We're into the more positive seasonality side. We do get this, kind of coinciding effect with perhaps topping yields in the short term. So you've got this nice kind of catalyst backwind for stocks at this time. So that's what I got. Hopefully you enjoyed. Let me know your thoughts in the comment section below. What are you watching? Are you believing in this kind of market bottom here? Do you think we just get a sustained rally into year end? Let me know your thoughts in the comments below. And don't forget to check out the description of our YouTube video. Lots of other cool links and IBD links in there as well. Hope you had a good trading week and have a great weekend. We'll see you back here next week, same time as usual. Take care and see you soon.